So good morning, everybody. Welcome to the latest in our Rhetoric to Reality webinar series. Just trying to get some fresh perspectives, new ideas in terms of a variety of policy issues, kind of trying to avoid the word policy in some ways as well, and just trying to make sure we talk about policy in terms of, our everyday lives kind of thing, and the practical aspects of policy. So the latest one today is on social investment and funding. Almost forgot the name of the webinar there. It's been quite a lot of different topics recently. And we've got three brilliant speakers coming from different perspectives in terms of investment and funding, and just trying to get people thinking, trying to get us all thinking around this topic, what our needs are as entrepreneurs, as organizations, the needs of the sector, etc., and just kind of new things we might do. And also, we're really keen on hearing your own experiences as well, and your own kind of experiences of funding and investment actually, and what you're thinking of maybe doing for your organization in future. So, as I said, we've got three speakers today from different perspectives, and I'll introduce our first speaker, who is Pamela Barnes from Democratic Finance Scotland. Pamela, over to you.
Hi, thank you very much. Thanks, Duncan. So, yeah, my name is Pamela. I work for Democratic Finance Scotland, and we are a team within DTAS, that's Development Trust Associations Scotland. And I'm going to run through, hopefully there'll be loads of time at the end for questions. I've got quite a lot of slides and they'll be shared afterwards. Andy, can you share a slide?
Yep, that should be them there.
Thank you. So we're Democratic Finance Scotland. You may know us as Community Share Scotland. We had a rebrand last year and we're broadening out what we're doing. So next slide, please. So a programme of support, there's a team of 5 of us for community-led organisations and enterprises to explore alternative methods of raising finance and funding, and it's particularly to attract money that is locally sourced. And this has grown out of Community Share Scotland because of the success of that programme, really. And it is realising that there is some untapped opportunities to take the success of the community shares and see what else can be done. So this is about ensuring communities have financial control and the democratic power together to take ownership of community assets and to run democratic community-led businesses. Next slide, please. Thank you. So why is democratic finance needed? This is because we've seen across the sector that grant dependency is very high, and the pot of grant funding is also reducing. Social investment loans are not always the best fit. Sometimes businesses need more patient finance, and also even if you get grant funding, very often you will need some match funding required, and this can help to match. It's also finance is needed to be flexible, not always for capital, and some additional funding even just for running capital, running finance. It's also about not just about the financing, but building robust enterprises that are democratic and really wedded to and linked to the community where they're based. Thanks, Andy. So what are the sources? So I've mentioned community shares, and really community shares is still the bread and butter, and I'm happy to talk more about that. And we continue to provide support for community shares, and that can be across a whole different range of different sectors and social enterprises. But we're also exploring community bonds. We're about to launch an evaluation of community bonds that haven't taken off massively yet, but we're seeing that might be an area of growth. We're also looking at grassroots legacy giving for local legacy giving rather than to national charities. We're also exploring how to build local philanthropy, growing donation-based crowdfunding, one-off community lotteries, and also exploring common good funds, how to tap into those more. So that's all ongoing work that we're looking at just now. Next slide, thanks. I'm going to go through these quickly and happy to talk to them, but this is really still our bread and butter. Community shares, it's about community enterprises raising funds. This is an investment, not a donation. Thanks, Andy. As I said, they can be used, they have been used across all these different sectors. Thank you. This is about ensuring community governance and being democratic. So so that it's one member, one shareholder, one vote, regardless of the scale of your investment. It's sort of social cause at its heart. It's flexible. It's patient, and what we've also found is that it really does create robust, successful social enterprises. 92% of organisations that have used shares are still trading, so it's quite impressive, really. Thanks, Andy. Really important with community shares, they are non-transferable. There's you can withdraw them within the scope of the business plan. You can give interest, that is maybe maximum of 4% interest, what we've seen, and there can be some tax relief if you choose to be charitable. This is just a breakdown of sectors, just to show you that there has been a spread of use of community shares. Thank you. Next. I've got a couple of examples. So Action Porty have just done a share offer. They were the first urban community right to buy project in Scotland, and they have now, just earlier this year, did a share offer to refurbish their building. They're doing it in 2 phases, but they've ran a fantastic campaign and raised 168,000. Look at the link for all the information about how they've done that. Next slide. Another example is Rassay, the hydro scheme there. Again, they were successful, and their hydro scheme went live in 2022, and that's now creating a surplus and generating a community benefit fund that is growing over time. Can talk more about that. We have time later. Next slide. As a team, we provide support to development trusts, but also more broadly democratic and accessible governance structures. So this is community-led enterprises more generally, and happy to speak to anyone that's interested in finding a bit more about how we can offer support. Next slide. 2 stages of support. We can have an initial inquiry, and then we provide really throughout the whole process, including as a micro grant for marketing. Next slide. I've just noted in here that we're also looking at renewables. We're part of the Scottish Community Coalition in Energy. There's a lot happening here just now in terms of making better use of community benefit funds, also pushing for a Scottish Wealth Fund. So that is work that we're currently doing in alongside Community Energy Scotland and Community Land Scotland. Next slide. That is our team. Next slide. Please do get in touch if you'd like to talk about your own enterprise and whether you think democratic finance might be an option for you, and happy to answer questions later on. Thank you very much.
Great, Pamela, thanks very much. And we'll come to questions and discussion after all the presentations, but that's really good. Good start. So we'll move swiftly on to our second speaker, who is Alastair Davis from Social Investment Scotland.
Hi, everybody. Hopefully that has worked and you can see my slides on the screen. So I'm Alastair Davis, the Chief Executive from Social Investment Scotland. So for those of you that don't know me, pleased to be with you this lunchtime, and alongside the other speakers, what I intend to do today is just give you a short summary about who Social Investment Scotland are, a little bit about our approach to investment funding, but also business support. And then in line with, I guess, the topic today, some thoughts from my perspective, perhaps to prompt further discussion and questioning in terms of the broader policy landscape that exists for social investment in the context of social enterprise in Scotland. So let me just move this on. So many of you probably will have heard of Social Investment Scotland, but we are Scotland's largest provider of social investment, and indeed actually now one of the largest providers of social investment right across the UK. That's experience that's been built up over many years. We're actually in the run-up to the start of celebrations of our 25th anniversary. So over that time, we've seen a number of different initiatives come and go. But our whole purpose and our mission as an organisation is to build an impact economy, and we intend to do that, or we aim to do that, by connecting capital with communities to make a real measurable and sustainable impact upon people's lives. And it's that connection role that really is at the heart of what Social Investment Scotland do as an intermediary. So we connect organisations that are looking for funding up with that funding, so charities, social enterprises, community groups right across Scotland that are looking for investment funding to support and grow their own impact. But that connection also happens in reverse. So we also help work with a range of different investors that are looking for both a social and a financial return by working with them to put together funds and propositions that then can be delivered to those charities and social enterprises. So it really is an intermediary role creating that connection. And over the 25 years that Social Investment Scotland has been in existence, we've worked with a range of different investors, and of course that does include the Scottish Government, but we have raised investment from a range of other partners, including the main banks in Scotland, as was and still is. They've supported us really across those 25 years. We're also a delivery partner for Better Society Capital, formerly Big Society Capital. We've also raised investment from the University of Edinburgh, and most recently we've raised a new funding commitment from an organisation called Kennyarth, who are an American organisation and family office. Alongside our investment propositions, we also run a programme of market building, really to educate and grow the size of the social enterprise market, social investment marketplace. And I'll talk a bit more about that in a minute. But I think one of the key things to bear in mind, and perhaps touching on what I'll reflect on shortly, is that Social Investment Scotland itself is always raising money. So sometimes I think that can be forgotten, but similar to many of the charities and social enterprises that we work with that are trying to pull together funding packages, we spend, and I spend, quite a bit of my time talking to our investors, existing and new investors, about how we might work with them or expand our relationships to raise funding that can be applied in support of our strategy. In terms of what that means in reality and for the front line, the autumn time was always our impact reporting season. So our 2025 impact report will be published in the next couple of months, but this provides a summary and a snapshot of the impact of our activity at the moment. And really broadly, about a third of our investments are creating two key impacts. So a third are in the most deprived communities, as defined by the Scottish Index of Multiple Deprivation, but also a third are in remote, rural, Highlands and Islands communities, which reflects, I guess, the prevalence of social enterprises and the outperformance of social enterprises in the Highland and Islands part of Scotland in comparison to the rest of the country. And that's something that I think will be highlighted again through the social enterprise census that will be published again shortly. Our investments are creating impact across a range of different outcome areas. Many organisations are providing impact across a number of different areas, and the main areas where we're making an impact are summarised there. And of course, we can't attribute all of that impact to investment from Social Investment Scotland, because quite often money from SIS exists alongside support from other organisations, including perhaps a community share raise or funding from another funder or investor or a grant funder. But altogether, what we do find from our impact reporting is that without the commitment of the investment from SIS, the project itself would simply not have gone ahead. So there is quite a significant link between our investment and the impact of the organisations that we support. In terms of our approach to funding, we aim wherever possible to take a tailored approach to funding. We're not a bank. We don't offer a standard, rigid range of products and funds. We like to try and keep things as flexible as possible to make social investment as accessible as possible for the organisations that we're working with. And a key part of that is our market building activity, which is an area of activity at SIS that has emerged in particular over the last 10 years or so. And that market building activity has got two main aspects. The first is investment readiness. So that's very much practical support and advice that helps organisations get ready for investment, particularly those taking on funding for the first time. And a key part of that work over the last couple of years and continuing this year is our funding socials events. So very much in recognition of the fact that social enterprises exist in all parts of Scotland, these funding socials events are effectively a roadshow that we take to all different parts of Scotland, more often than not, and regularly in partnership with other investors and other funders, bringing everybody together in a safe space and in a welcoming environment where people can find out about what's on offer in a very accessible way. And then obviously then have a follow-up conversation with the people that they've heard from at those events to take discussions forward. The next one of those is coming up shortly in Selkirk, but the full range of those events is publicised on the SIS website. But in addition to that entry-level investment readiness support, we also have got different programmes of activity that are about scaling up, building confidence, capacity and resilience. And a good example of that is our Ambitions programme, which is funded by the People's Postcode Lottery, which delivers support in a cohort basis to social enterprises that are looking to step up and scale up and therefore might require funding in order to achieve those objectives as part of that scale up journey. In terms of the actual investment products that we offer, so funding is available from £25,000 and up. We sometimes can go below that if it's practical to do so and there's no other sources of finance, but social investment becomes more challenging and more inefficient for very small amounts. And we do go up to around about 900,000 up to around about £1 million in terms of the funding that we've got available at the moment. Interest rates are between 8 and 12%, depending on what's going on and the risk associated with that, the particular initiative. That interest rate does include the cost of capital back to our investors, so there's no such thing as free money. So everything has to be incorporated in terms of generating the return for the people that are making an investment in us. But our ultimate objective is to keep the cost of capital as low as possible. And that funding can be used for a whole range of different purposes in terms of from bridging grants, providing working capital to support cash flow, or to purchase and refurbish assets. And that can include buildings as well as renewable energy projects. And we take a relationship-based approach. So everybody that's part of the journey with SIS does receive access to a dedicated named investment manager that will support them not only with the initial investment process, but then a point of contact throughout the investment journey. And finally, before I finish up, just a few reflections from me in terms of the current state of the nation of the social investment marketplace in the UK. I would say that investment readiness does remain patchy, and there's probably two key areas where support is required. Obviously, for investment finance, we do need access to financial information, but many organisations can find that challenging to put together. So we do have support on offer from SIS to support that journey and to give funders the information they require to allow them to make an investment decision. But sometimes that kind of financial acumen can be challenging within organisations, and we seek to help to support that. And another key barrier that we often see is the risk appetite of boards. So whereas a management team or a leadership team may be very ambitious, understand the issues and keen to take forward and grow the impact of their organisation, sometimes their board members come at things from a different perspective and with a different risk appetite. Sometimes boards think that an organisation that takes on social investment, and if they miss a repayment, then a board member will lose their home. And these things are myths that are perpetuated that simply don't exist. But really working with boards and helping them to understand what social investment is, and their own risk appetite is another key part of our work. There is a growing interest in organisations looking to scale up. So as well as providing access to small amounts of social investment, we do see a growing demand from organisations that are looking to scale and grow their activity. And that requires a different approach to investment and a different type of investment product. And we are working through what that might look like actually at the moment in terms of supporting those types of organisations. And then thirdly, certainly over the time that Social Investment Scotland has been in existence, and certainly in the time that I've been at the organisation, there is now a much wider variety of social investment products on offer, and that's fantastic. You'll hear some of them today, but there are others beyond that, and there is help and support around about accessing the right type of investment at the right time. And we don't exist in competition with each other. We're not all banks that are determined to grow a market share. We do want people to have access to the right money at the right time. So quite often we find ourselves introducing organisations to other organisations, and that happens in reverse as well, so that people are getting what they need at the right time. And then I guess the bottom 2 points are related in some way. The architecture of the investment marketplace in Scotland is now different to what exists in England, and we do see a growing disparity in terms of the level of investment and support that's available to social investors in England when compared to Scotland, and that's because of the role of an organisation called the Access Foundation. And the Access Foundation are able to access dormant asset resource, so that's basically money that's been left behind in bank accounts. And in England, that's used to support the development of the social investment marketplace. And what that has allowed social investment providers to do is a whole range of different things in terms of subsidising delivery costs, providing access to blended finance in terms of a grant loan mix, and just supporting a more diverse range of options. And that has also supported other investors to come into the space based on the reassurance that comes from the funding from the Access Foundation. So we don't have that in Scotland, so that presents a challenge in terms of how the infrastructure of the organisations in Scotland are able to develop. So just some thoughts, maybe we'll come back to those in questions, but happy to take thoughts towards the end. Thanks, Duncan.
Great, thanks, Alastair. And I think, yeah, points about dormant assets, for example, are really important. So it's maybe something that will come up in the discussion. And I think that point about partnership working as well is really important as well, working across different organizations and really just examining different options of funding and investment as well. And, not just maybe latching onto one solution, there are multiple solutions for organizations. So just coming to our third and final speaker, some of you may have noticed that our 2 speakers which were advertised unfortunately had to cancel fairly last minute. So we are delighted that Jason Henderson from SCVO has been able to stand in at the very last minute. I'm sure he's fully prepared, of course, but he's stepped in last minute. So we really, really appreciate that. So Jason, over to you.
Hi folks, it's a pleasure to be here, and I appreciate Duncan's enthusiasm or confidence that I am fully prepared. But at least my hastily prepared last minute slides have managed to get to Andy, I see, so that's great. I'm Jason Henderson. As Duncan said, I'm here from SCVO, which is the Scottish Council for Voluntary Organisations, the national membership organisation for the voluntary sector in Scotland. We provide services, events and training, support and learning, research, and our policy work on behalf of over 3,500 members. I've been a member of SCVO's policy and public affairs team for around 3.5 years now, and I lead predominantly on 2 areas, the rather broad and wide-ranging area of better regulation for the sector, and also on our fair funding work, which is what I'm going to touch upon today. I know that there's a desire today to focus on making policy more open, practical and accessible, and talking about real-world positive solutions. And I think that's really key to our fair funding work, particularly at this juncture. But before I go on to speak about what we want to achieve in that regard in a bit more detail, I do just want to be a wee bit more policy focused for the time being and take a brief moment to outline what our fair funding asks actually are and why they exist. Next slide, please, Andy. So we know anecdotally that the sector faces several ongoing challenges, such as uncertain annual cycles of funding, untimely decision-making, static levels of funding, inconsistent relationships with senior civil servants, and a lack of flexibility. But we also have the data. Our research team at SCVO lead on the Scottish Third Sector Tracker, which some of you may be aware of, and the latest wave of data comes from spring 2025. That data shows us quite clearly that 81% of organisations across the sector report financial related challenges, which is an increase of 10% since spring 2023. 37% of organisations report having to operate with a reduced budget. 60% say that rising costs have a moderate or significant impact on service delivery. In short, things are not improving, and something needs to be done to support our voluntary organisations financially. And over the last couple of years, we've believed that one way to provide that support is to improve the funding landscape for organisations. Next slide, please. So I'm not going to go into the finite detail of all of our fair funding asks. You can find all of that on our website, but essentially our asks are broken into 4 themes, and we aim this firstly at the Scottish Government, but in fact the asks and principles that are contained under each theme can apply to essentially any funder. So we want to see more multi-year funding, which is fairly self-explanatory. Organisations need longer-term funding models to provide security, plan effectively, and retain and develop staff. We want more sustainable funding, so that includes the likes of inflation-based uplifts and support for the real living wage. We want to see more flexible funding. So primarily, we want funding that is unrestricted, that provides the core costs or covers the core costs that so many organisations need. And we want to see more accessible funding. The sector needs streamlined and consistent approaches to application processes, clear guidance, simplified monitoring and reporting approaches, and timely decisions and prompt payment of funds. Next slide, please, Andy. Now, we have made progress in this area. Firstly, fair funding has become part of the lexicon. It's become part of the conversation. That has been largely down to the number of organisations who have embraced, championed and taken ownership of our asks. A number of organisations have incorporated it into their own work. For example, the Poverty Alliance regularly includes fair funding as part of Challenge Poverty Week, and many other organisations have done so. It also features heavily in all the work that we do at SCVO, such as Programme for Government Influencing, Budget Influencing, etc. It's also led to Scottish Labour making a policy pledge to a new deal for the third sector, which is heavily based on our fair funding work. And that's, of course, ahead of the elections in 2026. It's led to the Community Planning Improvement Board publishing its own fair funding guidance locally. It's led to the Social Justice and Social Security Committee focusing its pre-budget scrutiny last year directly on the funding of the voluntary sector in Scotland. Next slide. And crucially, it's led to a commitment by the Scottish Government to introduce what they've coined fairer funding, not at all confusing, by 2026. Now, what we've seen so far has included work around improvements, predominantly to timely notifications, so ensuring that organisations are receiving notification of their funding in a more timely manner, and a multi-year funding pilot that's underway that's going to run for 2 years. Now, that's great, but it's only 2 of around 14 or 15 fair funding asks that we've pulled together with the help of the sector. And so we continue to engage with the Scottish Government on extending and improving what fairer funding actually looks like in practice. Next slide, please. So despite the progress we've made and the support fair funding is received across the sector, one thing we're now keen to do is making those asks more accessible, to reframe our calls for fair funding in a way that you don't need to be a policy board or a fundraising expert to understand, to tell the stories of the direct impact of poor funding practices and the reality of that on the services that everyday people rely upon within their communities. We're currently pulling together SCVO's manifesto ahead of 2026, which will include a predominant focus on our fair funding asks. Part of that has also been to work with a handful of organisations on fine-tuning and refreshing those asks, particularly around the language used, so that they're as relevant and as coherent as possible. And we're also now engaged in a piece of work that we hope we will be able to share later in the year. And it's a piece of work that we hope will reframe those fair funding asks in a really effective way. We want to work with partner organisations on something that outlines the barriers faced by organisations providing key services in really vital areas across Scotland: health and social care, children and young people, equalities and human rights, transforming the economy, encouraging volunteering, eradicating child poverty, tackling the climate emergency, and on and on and on. All hugely important areas that the voluntary sector in Scotland plays a crucial role within, but all areas that will continue to suffer as voluntary organisations continue to face the barriers of poor funding practices and an inaccessible funding landscape. We want to provide a clear and easily understandable explanation of what the future might look like in those areas without an improved funding landscape, without fair funding. And crucially, what it might also look like if good practice is implemented across the board. Something that anybody can engage with, understand and relate to based on their own experiences of the vital services and organisations doing invaluable work in the local communities. And maybe once we've published that work, as I say, hopefully later this year, I can maybe come back and talk to you all about its actual contents. Next slide, please, Andy. So that's about it from me. Hopefully that was a bit of a whistle-stop tour around our fair funding work, and perhaps more importantly, the work we are undertaking ahead of the elections in 2026. We're always keen to chat with anybody who has an interest in this work, be it sharing their own views or experiences, providing data or case studies, or in fact being actively involved in the work we're taking forward. So please do get in touch if any of this piques your interest. jason.henderson@scvo.scot. Check out the website. As I say, there's a lot of stuff on there about fair funding. But other than that, thanks for your time.
Brilliant. Thanks, Jason. And it's just really good getting those, I think there's 3 different perspectives as well. And again, what is this all about? It's really about getting as much money as possible towards social community impact. Basically, that's kind of what we're all about here, whether that's funding, investment, or alternative mechanisms. That's really good. Great. A really good start. So we've got plenty of time now, about 25 minutes or so for questions and discussion. So feel free to go for it. Obviously, put your hand up if you want to ask a question or a point for discussion. Doesn't have to be a question as such. Or I can go to the chat. There's one in the chat. So the one in the chat is for Alice, just to start with, and it's the question is the market building activity that SIS offers, i.e. investment readiness and scale up programs, a free service for social enterprises to access?
It absolutely is a free service. So the funding socials that I mentioned are probably the most mainstream and accessible ones of those. You invite everybody along to them. You might even get a lunch as well. So there is such a thing as a free lunch as part of those events. Some of the other programs that we deliver are perhaps delivered on a cohort basis and therefore are by application. So for example, Ambitions, the kind of scale-up program that I mentioned, is free to access, but there is an application process just to make sure that the right organisations are getting access to the right type of support at the right time. But again, those would be free to access as well. But ultimately, yes, everything's free.
Brilliant. And a free lunch is always good. I can testify to that. So anybody want to come in and put the hand up to ask the first I was going to say in-person question, but first, I don't know, question. Anybody? I mean, any of our speakers can also add points and questions as well if you want to, so feel free to do that. Ewan, would you like to come in?
Yeah, apologies. I was eating something while
Right.
you're all speaking.
If you
So
want to say your organisation name as well, sorry.
I will do. So I'm Ewan Leach. I'm from Surf Scotland's Regeneration Forum. Thank you very much for your presentations. Jason, it's a question for you. We're likely to have 3 asks within our own manifesto. One of those asks will be the SCVO's fairer funding thing as a fundamental thing to all of us. But I've just come out of a meeting with another group of organisations, and we had a presentation from the Decelerator, who are working with SCVO amongst others. And I suppose one of the things that we're aware of in sort of our desire for longer term funding, that some of the conversation with funders around that is funding longer, but narrowing down the field of what gets funded. And I wondered, that's quite a challenge. And I know internally from civil servants who have worked on fairer funding things, that's a challenge for them, because they have looked at narrowing who they fund for longer, but have had political intervention because the minute somebody doesn't get funded, other things come into play. And I wondered how SCVO saw that kind of playing out.
Yeah, so interestingly enough, it is something that we have been discussing recently, that very key point. I think, yeah, I think there is, it is one of those ones where you can see that if there was multi-year funding across the board of, I think, SCVO defines multi-year funding as that minimum of 3 years. So if you had multi-year funding right across the board, I think it is perhaps logical to assume that that would in some way deprive others the opportunity of that, annual opportunity to kind of get themselves in the door, if you like, and to kind of receive additional funding. I think it's something that needs to obviously be dealt with carefully. I think our perception of it would be that as long as it's something that we're aware of, we're not advocating for multi-year funding right across the board. We're not suggesting that every funding stream has to be multi-year. I think there are multiple examples where multi-year funding perhaps is not adequate. There's also an ongoing debate about what actually, the length of multi-year funding should be. Scottish Government have obviously went with this pilot of 2 years. SCVO says 3 years. We had recent conversations around refreshing those asks. Like I mentioned earlier, and organisations were suggesting 5 years, 10 years. A lot of independent funders, for example, are looking at those long scale kind of funding tranches. So I think our perspective on it would be that it is something to be cautious of, it's something to be aware of, and it's something to tread lightly around. Don't think we see it as a direct barrier to implementing more multi-year funding, but it is certainly something that needs to be taken into consideration. And it's perhaps one of the reasons why we always kind of point to the fair funding package of asks as a whole. We've never suggested that multi-year funding is a magic wand. We've never suggested that is the be all and end all. There are many organisations who, for them, multi-year funding is not the issue. It could be the lack of core costs, it could be the lack of full cost recovery, etc., etc. So for us, it's about the package. It's about the package of fair funding, of which multi-year funding is one of, as I said earlier, I think 14 or 15 asks. And it's about working with funders and Scottish Government and crucially the sector on co-design to make sure that it's right. There will be certain streams that longer term funding makes sense. There will be others that it doesn't. And it's important that we get all of this right rather than just kind of replacing the annual cycle with multi-year across the board and assuming that's going to work. So yeah, it's something we continue to talk about. It's something we continue to take on board. And hopefully that answers your question.
It does. Thanks very much.
Pamela or Alastair, would you like to come back on any of those particular points at all? Don't have to.
I'm happy just to chip in something briefly about obviously one of the biggest risks with certain organisations that are applying for investment funding is the income streams and the sustainability of those income streams. So more often than not, one of the biggest risks in any organisations that is in receipt of Scottish Government funding is that cliff edge that comes up every 12 months. So if Jason's absolutely right, it's not right for every funding stream or every funding programme, but for certain core programmes or things that have been delivered over time, if there was that certainty, then it may then unlock the ability to provide other types of funding alongside that core funding, such as social investment that would give investors like CIS the confidence to provide longer term commitments as well that can then be used to build, I guess, the longevity and scale of that impact as part of an overall funding package. So it's absolutely something that we would endorse as part of lobbying around the election next year.
Great. So I said we are keen on hearing people's, views and experiences about funding, investment, etc. But also anybody's got any new ideas or as well. Obviously, I think like the democratic finance agenda, that's a lot of new stuff in there. I think a lot new for a lot of people at least. So if anybody's got any new innovative ideas, again, the context is the election, as we've talked about already next year, and manifestos, etc. So feel free to chip in with any views, experiences, or new ideas. It's maybe too much of a challenge. I don't know. Karen, would you like to comment?
Yeah, hi everybody. I'm Kerry Grant. I've just started working with Firstport as a growth advisor, and that's with the Catalyse Fund. I think it's probably worth just putting that into the mix as well. It's great to hear from you, Alastair, and everything that CIS does, and we work very closely with CIS. We also have investment funding available, together with support for social enterprises right from a very early stage right through to when they're wanting to grow and expand the work they're doing. And one of the things that the Catalyst Fund does that's a little bit different is that it's revenue-based funding. So we're a flexible model where it means that we look at the revenue that a social enterprise is generating and use that to then work out how much their repayments would be on a monthly basis. So it means that there's a slightly different way of looking at how the repayments could work. There's also a fixed fee as opposed to so everybody knows exactly what they're going to be paying from the beginning. So it's just a different model that can work for some, exactly as Az says. It's not for everybody because it is investment. It means it's got to be paid back, and that's all part of the deal. That's part of them needing to grow and develop the money as they go along. But it's just worth putting First Port in there as a support for social enterprises. Have a look at the website. There's Step Up, there's Launch Me, there's all sorts of other programs there that start from a very early stage for supporting social enterprises to grow, get investment ready, and then look at the best route forward for them to deliver. So I put that in. So thanks very much.
No, that's great. Actually, it's good to mention that as well. Actually, it's good just to see, I suppose, the whole investment and funding landscape is really important to get those different perspectives. Chris Holloway, would you like to come in?
I wasn't going to do this, but since colleague from First Port has done it, so obviously you've had two very good presentations from investors, and then obviously from Jason. I'm the head of social investment at Foundation Scotland, so we also offer social investment. Our offerings are a little different from those that have been described, in that we offer part grant, part loan. 3/4 of your investment would be loan and 1/4 would be grant, and we charge that at a flat fee of 6%. Now, we differ from SIS and First Port in the fact that we only do up to £250,000. In some instances, we'll go a bit further. But Alastair's absolutely correct. There's a number of deals that that SIS, First Port and Foundation Scotland have partnered on. We're always cross-referring. It is most definitely not a competition. But it's when I started doing social investment, which is almost 12 years ago, it's a far more buoyant landscape. Despite the lack of access fund, it's a far more buoyant landscape. When I started, I think there was only SIS, to be honest, and some of the charity banks, but now it's wider. We also have a partnership with Democratic Finance, and that Foundation Scotland can be a purchaser of community shares. So we took a set of community shares in the Action Porty project, that was our first purchase. So we have different ways of supporting organisations, and you might speak to me and it's wrong for me, but I might send you to First Port, or you might speak to First Port and they send you to SIS. So it's a very wide open market, and there's lots of work still to be done.
No, that's great, Chris, as well. The last two speakers just there, actually, that is really important to tell us what's out there. To be honest, I think there is a lot of lack of awareness. I think still, even within our membership, within the social enterprise community, around what is actually there. So I think it's really good to promote that. And as I said, this is being recorded, so lots of social enterprises will also watch this after as well, hopefully. I just want to ask a question, I suppose, about reluctance and risk. So in terms of social enterprises and third sector voluntary organizations, do you still find, this is a question to our speakers, do you still find there's a reluctance to take on board investment specifically? There's still a kind of misunderstandings, there's not an appetite for risk, that kind of thing. Is that still a big issue for the people you speak to? Sorry, not just the speakers, it could be anybody here who's offering investment.
I'm happy to kick off, and then others to come in. Well, we're in the business of risk, so every proposal that we assess, we're assessing the risks. So we look at all different aspects of the proposal, because ultimately, because of the obligations that we have to our partners and our funders and our investors, we have to ensure that we're given the best chance possible of the organisation being able to repay that investment. So there's risk involved in everything, and it's the assessment of that risk that's key. Social investment is not right for every organisation. So none of the organisations that are providing repayable finance are about forcing anything on anybody that's not right for them. And that's been demonstrated, I think, in terms of the partnerships that exist between the different funders about getting the right money at the right time. So where the organisation's prepared to explore that, or has got an interest at least to open up the conversation, then it's then about being able to provide the right level of support to that organisation. Quite often we find that I remember coming into Social Investment Scotland and being told that people were quite simply terrified about picking up the phone to us. And really what we've tried to do over the course of a number of years is making it much more accessible, much more friendly and much more approachable so that organisations can access the information and make an informed decision. I think where the evolution of the market is great is we now have things like community shares, and that quite often can be the first step on a journey. It's very accessible for organisations. So Pamela, I don't know whether there's something that you want to say about that from that perspective.
Yes, thanks, Alastair. When I'm thinking about reluctance and risks from the groups that we work with, I sometimes find the actual opposite, because it's communities that are very often wanting to save a community building or save a pub or a shop from closure, and they're already emotionally invested in it. And so it's that balance of reality check. Let's make sure you have a business case here, but then also really encouraging that momentum, because that can go a long way. I mean, Glenue Community Inn just ran a fantastic campaign and got their target and also their reach, their stretch target as well, 300,000. That's a very small community, and they did a brilliant social media campaign to get non-resident contributors as well. So I think that it's about that business support to manage that enthusiasm in a way that's going to actually make it work as a community business.
That's really interesting. It's a really good point, actually. Yeah. I don't know if Jason, you want to come in with anything around any of that at all, or oh, okay. Ewan, you had your hand up. No, you didn't. It's an accidental hand. That's fine. Anybody else got any particular questions or points for discussion? I mean, I suppose one of the things I'm really keen on exploring as well is really other sources of investment or funding. So, you know, a lot of organizations out there, a lot of social enterprises, charities, community groups are struggling, as we all know. And it's just trying to look at alternative places to access, you know, funding or investment kind of thing. Is there anybody got any thoughts on that? I know, Alastair, obviously you talked about dormant assets, for example, and the kind of issues all around all that, which you can maybe talk about. But other places, well, like even we're talking in our manifesto a little bit, which hasn't been published yet, a little bit around the taxation system, for example, and kind of, you know, really utilizing that a bit better and maximizing, you know, tax returns, all this kind of stuff. Because there's lots of options. I think it's just trying to get people to, well, getting governments to think that way. So has anybody got any particular thoughts about that around additional places to access these financial resources?
I'm happy to talk a little bit about dormant assets, since you've mentioned that, Duncan. So dormant assets, as I touched on briefly in my presentation, are basically the little bits of money that your granny left behind in a bank account and forgot about. And then there's legislation that's been passed UK-wide can allow that money to be swept into something called the Reclaim Fund and then invested in good causes. So every devolved nation has the opportunity to invest that money in a different way. And obviously England is a bigger nation and therefore has a bigger share of the dormant assets. But one of the things that it's chosen to do with its dormant assets is various different interventions that have supported the infrastructure and growth and development of the broader social investment marketplace by supporting a diverse range of providers. So one of the things that they've been able to do is support the development of funds within different social investment intermediaries that perhaps have a mix of grant and loan finance, perhaps provide the intermediary with a grant towards their development costs, so not all of that's having to be passed through to the end user. There's also ways in which they can structure their money so that it can attract in private investment and provide them with a bit of a guarantee that that money will be protected in the event of significant losses. And what that has meant is there have been a number of different organisations that have been able to develop and evolve a more sophisticated offering for the English social investment marketplace. And it also came into its own a little bit during the cost of living crisis, because Access was able to respond with particular funds around about cost of living and also energy efficiency. So because the Scottish Government has taken a different approach with how it uses its dormant assets, at the moment they're invested in youth projects, that is different. And of course, devolution is all about making the right choices for the different parts of the UK, but it is something where we see a kind of a disparity emerging between what's happening with the social investment marketplace in England compared to what we are able to do in Scotland.
No, it's really useful to know actually as well. I think the dormant assets there's a lot of additional potential there. I think that's one of the key points there. Anybody got any thoughts on dormant assets, or indeed any other alternative or additional sources of finance? I mean, it's a bit of a complicated question, maybe. Yeah, go for it. Yeah.
Duncan, I thought I'd just put in the chat a link to the Scottish Community Coalition and Energy policy asks. It's not just for enterprises that are involved in renewable energy, and it's current. It's happening right now. We're campaigning and lobbying with Westminster and also the Scottish Parliament. So there might be some things of particular interest. So I'll put a link in there. We've got a parliamentary event coming up next month on community energy, where we'll be really celebrating the successes of energy and also pushing for more, because it is a way to access more funding and financing of good work within communities.
Brilliant, that's great. Oh, yeah, it's just in the chat just there if anybody wants to access that. And again, if you want to post anything in the chat in terms of web links to relevant resources, or indeed email them to us after, that'd be really useful actually, because we will be emailing all the delegates who've attended all our Rhetoric to Reality webinars with a very long list of resources as well as presentation slides. So Jason's had to head off because he's got to go to another meeting, but anybody else got any, I suppose, additional final points to raise or anything they want to promote? Sally-Ann, do you want to come on?
Hi there. Yes, so I'm a fundraising consultant, lifetime consultancy. I wanted to mention a course that I've just completed from Good Finance, and it's called Social Investment Unpicked. I'd really recommend it. And the point I wanted to make on it was the point about risk. So I work mainly with charities and community interest companies, and trustees, so boards of charities, are volunteers, and they are risk aware and risk averse. And the thought of taking on repayable finance, as Alastair mentioned, there's so many myths around this, and the fear that their homes might be taken, the fear of personal liability is huge. One of the points that was raised on the course was the upside, and I think there's so much focus for the boards of charities on the downside, is helping them to see the upside. And Alastair mentioned one of those, which is also linked obviously to multi-year funding, but I think it also is linked to social investment, is that it can show a more positive cash flow when you're going to other funders. It can show less risk in your cash flow, so it can encourage other funders to come on board, but also it can reduce your costs. And one of the examples that he gave, which I just used recently with a board, was an example of a working capital loan, which then meant that the organisation could pay their rent up front. They got 2 months free, they got a rent reduction. And I actually, when you crunch the numbers, it paid for the loan. It paid the 8% on the loan. So I think my takeaway from it was, if we can do more work to show the upside, dispel the myths, but also show the upside. And as I say, I'd encourage people to do this course as well.
No, brilliant. So that's a good place to end on, I think, as well. If you want to send us the web link to that course, actually, it'd be quite useful. We can certainly promote that to our members, etc. Anybody got any final points or questions? Again, I always say this, but it's not the end of the discussion. It's the kind of beginning of it, really, in lots of ways. Anybody got any final points? Are you sure? Last chance. Right. Okay. All good. So yeah, so firstly, thanks to our speakers today. I think that's just three really valuable, very different perspectives as well. And I think it's just showing our members there's lots of options out there, and it's particularly people who are struggling as well. There are alternatives available. And again, we're here to help our members obviously access those opportunities at any point as well. So thanks very much to our speakers and to our attendees today. Please do book a place at the next webinar, which is next Wednesday. I'm trying to remember what it actually is, the next one next week. I think it's the Alliance for Change one, which is about building alliances between social enterprises and other impact businesses. And I think that's the second to last one actually in our series at the moment, but we might add some more webinars on as well. So everybody's welcome to come along to them. They're all free, obviously, and they're on our website and our events page. So please feel free to come along. But yeah, thanks to our speakers again. Thanks to everybody coming along today, and have a great day.